I mean, the reaction is going to be bad. You already see signs of it because the collapse is happening. It's just not evenly distributed. The SEC and Gary Gensler, they've been trying, I think, to get Binance and CZ out of the way before they let the spot market ETFs for Bitcoin trade. They were successful in doing that.
Today we have Max Keiser discussing the looming economic crisis that has been building now for years and believes that we're now months away from a catastrophic event. The collapse we're seeing of many countries' fiat money systems indicates that the situation is extremely dire. The recent inflation numbers are also a signal of these systems' instability and is surging as we speak. Keiser emphasizes that the repercussions are tangible, impacting people's ability to afford housing, food, and energy. He points out that not only is the economy spiraling out of control, the interest on US debt has now surpassed even the military's budget. He criticizes the failed promises of economic growth through trickle-down economics, and says that we instead watched an abundance of money printing and misallocated investments, contributing to capital disappearance. This pattern, involving trillions of dollars, has fed into an elusive financial void controlled by major accounting firms. Keiser predicts a transition to a Bitcoin standard, accelerated by waves of bank failures. He says hundreds of banks are insolvent and sustained by dubious accounting methods, which will be put on display as we start seeing more banking collapses in the months ahead. Let's get right into the latest interview with Max Keiser, as he gives his market prediction for the first part of 2024 and how Bitcoin will play a role in crypto, stocks, and financial markets worldwide. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
The only risk that I see is that the coiners show up like Coinbase and Brian Armstrong and these others, Jeremy Allaire at Circle. And those guys are on the level of CZ or Sam Bankman-Fried. They're incredibly bad actors and they're destructive. And they have as all con men do, they have a way of worming their way into situations. So, in the US, you have something like 90% of the wealth is now concentrated in 5% of the population or less. So you'll have 99% of the wealth will be in the hands of 0.01% of the population, and they'll have everything that they need inside the castle. The way to get the population to sign on to that, number one, they'll bring in CBDC, central bank digital currencies. So the way that they'll do that is they'll say, oh, hey, you've got $10,000 in your account. We're going to convert that to a CBDC and give you 100,000 of the CBDC. And you're like, wow, that's awesome. I'll take 100,000 of your CBDC. Thank you. But, within 6 months, the purchasing power of that 100,000 in CBDC will be less than the purchasing power of the 10,000 you gave up to get the CBDC. You'll be a lot poorer because they'll print at an accelerated rate. The CBDC will be printed at 10 to 20 times the rate that they're even printing the dollar. The hard money crowd, the Bitcoin crowd, the audit the Fed crowd, the people who are saying that fiat money is really the root of the problem. If you go back to Occupy Wall Street, which was, they rightfully pinned the blame on Wall Street. Okay. I mean, because that's the root of all of the problems is the money printing. But the extension of that, the way to take it deeper is to look at what drives Wall Street, and that is the dollar and fiat money. So anyone who was doing Occupy Wall Street should be, all about getting on the Bitcoin train. It's not proof of stake. Where proof of stake, like in the fiat money world, the more money you have, the more ability you have to make policy, to influence. So the game is to make as much money and then change the law to make it easier for you to make more money. And then ultimately, the least advantaged, or the people who don't have a lobbyist working for them in Washington lose. They lose out. And then the lefties come along and say, we need to make it fair by giving them some money. We're going to print some money and give it to them to make it fair. More money printing. And then you've got this Titanic-sized problem sinking into the sea of fiat money abyss. But unfortunately, that crowds out legitimate investment and legitimate entrepreneurialism, which is not getting funded the way it should be, which would create the jobs and the opportunities in a more fair way. Either you have a central bank like the Federal Reserve Bank, and you have a very strong organized labor force. So in other words, the central bank works for the oligarchs, and organized labor would work for labor, and that the labor would fight to have their wages tied to money supply. So the average hourly wage right now would be closer to $50 to $60 an hour to keep pace with the amount of money that goes into Wall Street's pockets. Okay, that's one system. That could work. Or you could have no central bank and you have no organized labor. This would be more of a free market system. That would also work. It has its pluses and minuses, but it would also work. The worst possible combination would be that you have a central bank and you have no organized labor, which is what you have in the United States right now.
Right.
Right. And that's the worst.
Yes.
So, and labor will have no ability to fight the central bank by lobbying for higher wages and higher benefits. That will never equal the playing field. Their only way to equal this playing field is to get onto Bitcoin by essentially walking away from the entire fiat money system, central banking system, and going on a Bitcoin standard.
Keiser goes on to say that because of massive insolvency, central banks and the Federal Reserve are now over-leveraged. Japan has always been one of the top lenders globally because of its cheap money. This has led to Japan reaching into assets that have now crippled its infrastructure.
The countries where the currency is deteriorating, you have more emphasis to solve the inflation problem with Bitcoin. So you're going to have that will be where things perk up. In economies that are centralized, highly centralized, it would be less of an issue because they are very much a very centralized command and control economy. So that's not going to be in the works. They are walking away from the dollar and they're trading in their own currencies, and they're going to trade in gold, and they'll probably trade in Bitcoin on the sovereign level. And that will trickle down to the individual level at some point. Again, because once you start to go down the Bitcoin path, it just makes more and more sense. The more you study it, the more you use it, the more you realize how antiquated and ridiculous the current system is. And this affects everybody. So, I mean, as far as having different folks coming into the Bitcoin space of different political persuasions or different philosophies, ultimately, we all have faith that the Bitcoin is on its own vector. It doesn't need us, and it's taking us to a place we want to be, because nobody has any control over Bitcoin. It's on its own path. It's taking us somewhere.
Keiser
it was
predicts.
really the discovery of this protocol, which is the discovery of perfect money. And that has impacted our societies and our species. I mean, you could say that the same way. Let's say the discovery of fire, had a profound impact on human. The printing press, the electric light. These things have profound impacts on us as a species, as a culture, as a population, and it changes the direction, the path that we're on. The whole thing is collapsing. It needed to be reset. So Bitcoin is that reset button.
The Bank of Japan, historically central to global currency dynamics, is on the brink of default, which could precipitate a global economic downturn. Max foresees a looming economic catastrophe driven by collapsing fiat money systems, rampant inflation, and bank failures. He suggests that a transition to a Bitcoin standard might be on the horizon, as the world grapples with the impending crisis. As we begin the first quarter of 2024, he asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Keiser says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Keiser presents two bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. What do you think about the latest interview with Max Keiser? And what are your thoughts on his prediction for Bitcoin heading into 2024? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.